Hey guys, the purpose of this video is to work through the solutions to Accounting 101 Chapter 1 class worksheet. We're going to do 1 to 12 on this video. So let's go. Number 1, the financial statement that reports the revenues and expenses for a period of time such as a year or a month is the income statement. Income statement. Okay. Revenues and expenses go in the income statement. Number 2, the financial statement that reports the assets, liabilities, and stockholders' equity at a specific time is the balance sheet. Balance sheet. Number 3, need to know this one, guys. Revenues minus expenses equals, all together now, net income. Oops. If I could type, it would say income. There you go. Net income. Number 4, resources owned by a company, such as cash, accounts receivable, vehicles, are reported on the balance sheet and are referred to as the assets of the company. Number 5, assets, those things we just talked about, cash, accounts receivable, cars, land, are usually reported on the balance sheet at what amount? We all know that there's a cost principle that says everything goes at what it cost us. I don't care if it's worth $1 million more or not. Number 6, obligations, which are amounts owed, are reported on the balance sheet also and are referred to as liabilities. Liabilities, amount, something we owe others. Number 7, accounting entries involve a minimum of how many accounts? What we do is called double entry bookkeeping for a reason. You need at least 2 accounts because otherwise our accounting equation will be out of balance. Another important one you want to know, you need to know that revenues minus expenses for net income. We also need to know that assets minus liabilities equals owners. Oops, wait a minute. Took too much out there. Let's do it this way. Owners equity. Assets minus liabilities. Owners equity. Does that make sense? It's what I own less what I owe. So if I own $100 worth of stuff and I owe you $80, my equity's $20. Pretty simple. Number 9, which principle or guideline requires a company's balance sheet to report its land at the amount the company paid to acquire the land, even if it could be sold today at a significantly higher amount? What's that big principle? Right there, the cost principle. Cost principle. Number 10, which principle or guideline directs a company to show all the expenses related to its revenues of a specified period, even if they weren't paid in that period? So, for example, I incurred rent, but I didn't pay it till next month. Too bad. I want to show it this month when I owed it. That's called the matching principle. I want to match our revenues with our expenses. Number 11, a corporation pays its annual property tax bill of approximately $12,000 in one payment each December 28th. During the year, the corporation's monthly income statement reports property tax expense of $1,000. This is an example of which principle? Guess what? It's the matching principle again. I took my $12,000 annual tax and I split it up evenly over the 12 months at $1,000 a month to match it with my revenue. Notice the principles that I've emphasized here, cost and matching. Why did I do that? Because they're the 2 big boys. And lastly, accrual accounting, as opposed to cash basis accounting, is based on which principle? The accrual basis is the matching principle. We have 2 types of accounting, accrual and cash. Accrual accounting is required under generally accepted accounting principles, or GAAP, And remember who has to use them? Publicly traded companies. If your company has not sold stock to the public, they do not have to follow GAAP. Okay, that's number 1 to 12.